Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Tuesday, January 24th, 2022, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Currently, we've got futures down a bit after a couple-day rally. We're up testing some key levels on the S&P 500, but this morning, Dow futures down about 100 points, S&P 500 futures down 10, NASDAQ futures down 50. Crude oil prices up about 50 cents a barrel to $82 a barrel, and the 10-year Treasury yield down a basis point to 3.51%. A lot going on. Earnings season starting to kick in a little bit. The next week or two really we'll see a lot of folks, a lot of companies coming to their confessional, talking about what happened or what's going to happen. I don't think the reports are going to be particularly good. I think the market will focus much more on where we are looking and the guidance that these companies give, not just for the next quarter, but maybe throughout the balance of 2023. We still got the Fed in the picture, lots of things going on that we're going to have to try to figure out. But before we try to figure any of it out, let me take you over to our agenda for today. Going to start off with the daily market recap as we always do, then talking technically. Seasonality gave some really good information to our members at the beginning of the month in terms of January seasonality. We'll go over some of that. Earnings spotlight, and then we will wrap up with the 3 you must see. Lots of folks talking about Wayfair because of the big 26% move yesterday. I wrote about it on Sunday. This is something that we provide our members with as well, a short squeeze chart list, which identifies the highest short squeeze stocks, and we just look at it every day, waiting for those big breakouts. Wrote about Wayfair's breakout on Friday with big volume, and the move to the upside continued yesterday. Stock went from, $46 to $59 a share. So it was up about 26%. Anyway, 3 you must see today. We're going to talk about 2 others on that short squeeze chart list that you probably want to be aware of. All right. First, let's start off over at earningsbeats.com. Before we get any of that going, just want to make sure that you are aware of a couple of things. Number one, we have a free Earnings Beats Digest newsletter. This is published 3 times a week, Mondays, Wednesdays, Fridays. All it takes is a name, email address, hit that subscribe button. There is no credit card required. You can unsubscribe at any time. It's simply a 2-paragraph, 1 chart kind of a newsletter. So it's very quick read, couple minutes, give you maybe a trading idea, or could be an educational tidbit, focusing on some of the things really important to us, like earnings, relative strength, candlesticks, price volume, trend lines, moving averages, all that type of thing. So make sure you sign up for that. Also, anyone on our Earnings Beats Digest newsletter will be invited to our free events that we have, and we typically have a few of those each quarter. So you want to make sure you're signed up there for that. Bigger announcement, though, coming up this Friday. Got a lot of folks been asking me, well, why don't we talk a little bit more about how you trade? Let's see some some live action on some of the things that you look for. Well, we're going to do it. First time ever this Friday, January 27th. It's going to start a little bit before the stock market opens. We're actually going to have a planning session on Thursday evening, because I don't ever go into the day just, waiting for something to happen and then jump on it. I'm usually very prepared, organized, certain stocks I'm looking for. If the trade's set up, great. If they don't, you move on. But all of that's going to start on Thursday evening at 7 p.m. We'll meet for probably an hour or so, just going over some of the things, talking about the overall market, what we expect out of the market. Maybe in the short term, look at some of the divergences, see if there are any headwinds out there. Take a look at industry groups, sectors, what's hot right now. If you're a short-term momentum trader, you can't just go into the market without knowing what's leading. So you want to look at all 104 industry groups relative to the S&P 500. What groups are, where's the money rotating to right now? It's a big part of trading. Anyway, all of that's going to start Thursday evening at 7 p.m. And then Friday morning, we will get going a little bit before the market opens, going through earnings reports, and just setting alerts, doing the things that we need to do before the market actually opens. That way, when the market does hit certain levels on stocks, we're ready to jump on it. We'll also be running scans, by the way, throughout the day on Friday, showing you some of the key scans that I like to use, especially in a trending market to the upside like we've been seeing. Anyway, it should be a lot of fun. So this is limited, however, to our annual members at Earnings Beat. So come on board today, sign up for 30-day free trial, check out the service over the next couple of days. And if you really like it and you like the information we provide, think about joining for an annual membership and coming in and joining me on Friday. All right, let's move on to talking technically. So yesterday, Monday, got the week off to a good start, and that's unusual. Not just because it's Monday. That is unusual in itself. Monday is the worst performing calendar day of the week since 1950, and it's not even close. The S&P 500, the last 73 years, has an annualized return of about -14 or -15% on Mondays. You might think, okay, that's just one day of the week. Well, it's one day of the week of every month of every year for the last 73 years. It's close to 20% of all trading days since 1950. It's a lot of Mondays. That's a lot of days. -14, -15% annualized return. So Mondays historically are not good. But the worst Monday historically has been the Monday following options expiration. Goes down 63% of the time, only up 37% of the time. Fortunately for the bulls, yesterday was one of those times where it went up. Dow Jones up 254 points. That was up roughly 0.75%. S&P 500 up 1.19%. That was 47 points. NASDAQ up another 2%, having a really strong January. 223 points, almost 224 points. Getting very close now to setting about a 4 or 5 month high. After a weak fourth quarter, the NASDAQ has come to life. Mid caps up 1.25% yesterday. That was 32 points. Small caps up a little more than 1%, up 13 points. Every index now back up above its 20-day moving average. So you've got price action above the 20. Need to see that 20 above the 50 and sustain that. We've seen that now in the mid caps and the small caps. Still got a little bit of work to do here on the NASDAQ, and that's the one I'm watching closely. But look at the AD line suddenly just taking off to the upside and moving to a new high. That was a little worrisome a couple weeks ago, because even though we were starting to turn back up again, we were really close to about a 4-month low on the AD line. That has changed. Now it appears the NASDAQ is under pretty solid accumulation. As far as sectors go, I like the setup here. Technology, communication services, discretionary. These are the three most aggressive groups. And when the NASDAQ's running, typically these three get going as well, and that's been the case. Technology up about 2.25% yesterday. Communication services up 1.75%. Discretionary up just slightly more than 1.5%. Also, financials and industrial. So all five, what I consider the five aggressive groups, all led yesterday. Really good action there. All right, 10-year Treasury yield. The 10-year Treasury yield, you can see yesterday was up about 4 basis points to 3.525%. As I mentioned at the top of the show, currently we are down almost 1.5 basis points back to about 3.51%. Future is still about where I said at the beginning in terms of stocks. But 10-year Treasury yield, I believe it remains in a downtrend. I would consider this a double bottom right here. So if we can go back up through 390, different ball game on the 10-year Treasury yield. If we can't get through 390 and our next move is lower below this 337 to 340 area, that would certainly be arguing for further reduction in terms of 10-year Treasury yield. And that, I mean, I already think it's squashing inflation. There's just no reason to be buying a 10-year Treasury yield that was yielding even over 4%, but certainly now 3.4, 3.5%. No reason to buy a 10-year Treasury yield at that level if you believe inflation at 6% is going to stick around for a while. I mean, you're already down 2.5% before you even get started. You make 3.5% and your money loses 6% because of inflation. Investors will require higher yields on long-term treasuries in an inflationary environment, and they're not doing that right now. They're buying and sending the yields lower. Inflation, the bond market says it's dead. You know, you listen to the Fed or you listen to CNBC or you listen to some other media outlet, and they'll, want to tell you how bad inflation is. Hey, I've been to the stores. It is bad. It's been bad, but it's getting better. And the market says it's going to keep getting better. All right, moving on. Let's talk about let's talk about the S&P 500. So in talking technically, by the way, no economic reports of any significance out today. So we got some additional earnings. Earnings will continue to pick up. We'll talk about earnings in just a bit. But first, let's go over the S&P and the NASDAQ 100. So here, I mean, I'm not quite sure how you want to draw your trend lines. Trend lines can be really subjective. But, if we just take the top there and, come across and connect tops. Well, let's go right there and drag this down. So if we're trying to take and connect intraday highs, that one here, that one didn't quite reach, and then here. That basically brings us intraday. It looks like we made just a slight breakout yesterday. Closing, not quite. But if you take this line, this same line, and you connect candle bodies, and so this is going to be opens and closes rather than intraday, then we've got this one, this connects, these both connect, this connects, and this actually shows a breakout yesterday. Looks like 4,000 is the trend line. We closed at 4,020. And I bring this up for a couple reasons. Number one, trend lines are subjective. Everybody can draw them a little bit differently. I mean, I've seen some trend lines, just kind of not even touching anything, just kind of haphazardly, just kind of up. Oh, there's the trend line. Or I've seen, something where you're going like this and you go right through some of them. I try to be as careful as I can, and I tend to go with candle bodies, which are opens and closes, which to me is right about there. And I'm seeing at least a breakout here, but I'm not convinced. You can have false breakouts. What will really convince me of a confirmed bottom is if we take out the highs, this double top right here, and then there's one that's just slightly higher over here. I mean, I think if we move to about a 5 or 6 month high, snapping the downtrend line, I think it's going to be hard to argue that the bears are in control of the action any longer, especially with the 20-day above the 50, price action above both. We make that breakout up there. So I'm giving the bears a little bit of the benefit of the doubt here, up to about that 4,100 to 4,110 area. If we get through that level, I just don't see it anymore. Not with all the other signals, bullish signals that I've been talking about for months. All right. So let's move on over to the NASDAQ. What's the NASDAQ 100 looking like? Well, if we go back and we take the same approach, let's go back a little bit further so we can get that top from earlier. Actually, I might even want to go back further here on the NASDAQ. All right, so let's annotate this one. What is going on? I haven't really been, posting a whole lot about the NASDAQ, but let's see if we can come back here and find some. If I do candle bodies, I'm probably right about there. I mean, that's connecting the candle body from the beginning. And then this one in August, get pretty close on these others, not quite. And you can see we're not quite through. And I would throw again, that price resistance in there, right there. So I think if you get up to probably, it looks like around 12,200 and clear that, and we move to a 4-month high and the 20-day comes back up above the 50 and we've cleared the trend line, PPO's positive, I think at that point, I think we've got our confirmed bottom in place. And in case you haven't heard, last couple of shows, I've talked about this, but the S&P 500, the last 13 bear markets since 1950, 6 of them have ended in October. And if this one ends up ending in October, it will be the 7th of the last 14 bear markets where we have seen the bottom in October. Anyhow, thought that was interesting. Let's move on to seasonality. So every month, beginning of the month, I send out to our members at Earnings Beats a chart list with the top 20 seasonality stocks, just to be aware of. So these are all companies. They may look horrible on the charts. You may not want to even touch them, but they do have a seasonal tendency to move higher. And so I prepare this list. Here's the 20 stocks. And what I do in the name so that you can quickly identify what's going on here. This is Netflix. It's the number 1 of the 20. We do put them in order, and they're in order of their average December gain, which for Netflix going into the month was 15.9%. Now, if I go over here, let's just pull up the seasonality so you can see kind of how I do this. So I go over and I simply just go back to the beginning. And now it's 16%. It's up a little bit because we've had such a strong January in 2023. Remember, when I was doing this, it's prior to January 2023. I don't have those numbers. So we were at 15.9%. 70% of Januaries go higher over the 20-year period. And I just put this out there so that folks know when the earnings come in. So it's January 19th after the market closes, which was last week, and we got a nice up move. But that might be another reason why you don't want to hold a stock if their earnings are coming up, or maybe you do. Maybe you're a risk taker. Just trying to give a lot of information on each of these stocks as we go through. Now, down at the bottom, what I did is I put in the rate of change for the month of January. So it's 14 days. We've had 14 trading days so far this month. So 14-day rate of change, you can see Netflix right now is up 21.21% this month. Now, if I could go back over here to the S&P 500, the rate of change, 4.7% during the month of January, which, by the way, if we ended here, puts us in the top quadrant of January performance since 1950. There have been 72 prior years, actually 73 prior years. And if we finish where we are right now on the S&P 500 at the end of January, we will be up 4.7%. That will probably be somewhere around the 16th best January on record, or at least since 1950, which puts us in the top 25% of Januaries. That is significant because the correlation between January performance on the S&P 500 and the balance of the year performance on the S&P 500 has been very positive. That correlation, if you have a strong January, the tendency is you have a very strong balance of the year. Years in that top quadrant have averaged gaining another 15 to 16% over the course of the next 11 months. If you're in the second quadrant, you average going up about 10% the next 11 months. If you're in quadrants 3 and 4, you average going up about 2 or 3% over the balance of the year. So we want to be in that top quadrant just from a historical perspective. And that doesn't guarantee us anything. That's just a trend. But I think it's a trend worth at least noting and paying attention to. It would be another signal, if you will. Anyhow, S&P 4.70. So let's go through these. Numbers here on Netflix. As I said, 21.21. Next up, Illumina. Illumina just breaking out, just getting started. Volume. Watch the volume today. I think we could have another big day on Illumina potentially. But down here at the bottom right now, even though it hasn't done a whole lot, it's up 7.01% in January, beating the S&P 500. Dexcom, let's just go down. This one has not done well. This one is down 6.04%. It is in an area of gap support, price support. We could see a move from here. We'll see. FANG, really nice move here in December. FANG is up 9.19%. It's about double, almost double the S&P 500. NXPI, big move here in January. 9.49%. ENPH, not so much. ENPH down 13.78%, probably the worst performer on this list. At least I think it is. Meta Platforms loves January, and it's up 19% this January so far, right up there near Netflix. JD this January up 8.78%. VLO up 12.79. Tesla, big rally in December or January so far, 16.7%. How about CGen? Not a whole lot here. Up 3.88%, so just about a little bit less than the S&P 500. Domino's Pizza, not so much. I think it looks pretty flat. Minus 0.27. HCA, big move up here. HCA Healthcare, up about 10%. PHM, moving on to the home builders. Big month so far in January, up 12.15%. GLW, another big move in January here, up 13.06%. The ServiceNow, big move up. This one is up 13.95%. Hologic, look at the big move, breaking out again yesterday. Volume's been strong here in January. January gains right now up 9.12%. Then we've got Insight Corp, another one that's moved pretty nicely. This one's up 3.93, so maybe it's just going along for the ride a little bit. KMI, Kinder Morgan, up, not a whole lot though. This one's up 3.76%. Again, just kind of going along for the ride. And then the last one, Halliburton, also going along for the ride, up 3.10%. Anyway, those are the 20 stocks. We do this every month for our members, just another piece of research that we give our members to start every month. Very, very, we want to make sure everyone is knowledgeable when they make their trades. Seasonality is just one little piece. I tell members all the time, I don't buy stocks just because of seasonality. But if I like the stock and it happens to have strong seasonality, it's another reason for me to be confident about my trade. That's the way I use it. All right, earnings spotlight. First up, Danaher. Danaher reported this morning. I have not seen the numbers in terms of whether they beat top or bottom line on these companies that reported this morning. But what we can do is take a quick look and see what the market is doing in pre-market action. We have got Danaher down 2.7%. If you look at the relative chart on Danaher, and you look at it relative to the medical equipment group, it was leading all the way until the beginning of October. Since then, it's just been going flat, but the medical equipment group has really been strengthening relative to the S&P. And so what that's meant is that Danaher has actually been downtrending relative to the medical equipment group. So yes, it's going higher on an absolute basis, but it's been weaker than its group. And today it was down 2.7%. In pre-market action. We'll see whether or not that continues. We had an earnings session last night, and I gave our members 103 stocks that I either liked because of good relative strength heading into their earnings reports, or stocks I didn't like. 60 positive, 43 negative. One of them that I gave negative was 3M. Did not like the chart. Actually, let's look at it here on this chart first. And then we'll see what's going on pre-market. But 3M, first of all, look at it. It's still trending down. Remember that big move the Dow made in the fourth quarter? 3M's part of the Dow. What happened? Just not doing anything. Look at the relative weakness on 3M relative to its peers. It's been going down for months. So I don't expect anything out of companies that are trading like this heading into their earnings report. Now, you don't really know exactly what's going to happen in terms of market reaction, because when you're selling off, a lot of times it's sell on rumor and then it's a buy on the news. But the overall downtrend here for me, I don't want to own the stock until it starts to right the ship. So let's look at 3M here. And you can see pre-market down another $6, 4.71%. It's just not worth holding stocks like this into their earnings report. Now, on the other hand, I gave a couple of stocks. One was GE. I liked on a positive side. You can see the chart down here. Look at the way GE's been trading. Why would it be going up like this if Wall Street was going out and seeing, talking to management and not liking what they were hearing? Do you think they'd go back and be buying the stock hand over fist? No, they like what they're hearing. So I'm expecting a good report when GE reports. Again, a lot of it's built in, so you don't know for sure whether or not you're going to get that positive reaction, but I would expect good results when GE reports. Here, GE is up 2%, 81.50 breaking out again. I would be careful because a lot of times you get these buy on rumor and then the news comes out, we're getting a gap up. But because of the huge move, we could easily see a move back down to the 20-day on GE, which would be down around $74. That's almost 10% from here. After this big move and the good news comes out, I think this is a great company to think about buying on a pullback. Not after it's this stretched and not after the news is out. And it might go up to 81.50. It might just keep going. Maybe it goes to 90. We're talking about risk. And I think there's a lot of risk in GE in the short term, even though it's getting a positive reaction. All right. Last one I'll show you is DHI, because this was one Danaher that I really liked going into earnings. I said it was one of my top 10 going into earnings. It did get a positive reaction this morning. I haven't seen the numbers, but it is up 0.6%. All right, last thing I have for you, I want to go through and go over 3 short squeeze stocks. The first one, Beyond Meat. This is a stock that is currently, it has almost 40% of its float short. And it went up yesterday on increasing volume. It went through average volume, and it closed at the highest level since back in mid-September. We could see follow through on this one, especially if you see it trading above 17.5. Watch the volume. The volume should really start to pick up if this is truly one of the top, or if this is truly going to be a short squeeze stock. Wayfair, I mentioned this one, wrote about it over the weekend. After this breakout, this kind of looks a little bit similar to Beyond Meat, except look at the volume. That is short squeeze volume. Yesterday, up 27%. CNBC talking about it all day long. We talked about it before it made this move today. Third stock I'll show you, and the last one I want to show you is Upstart. This is another one that I think potentially could be starting a squeeze, but we need a little bit more volume. We need to see that volume pick up, and I'd like to see it get through $20. But it is starting to make a move here, looking pretty good. PPO moving. So this one looks a little bit better. Anyway, that's it for me. Appreciate you tuning in. Love to have you as a member. This short squeeze chart list, by the way, 42 of the largest shorted companies. We update this every couple of weeks, and members get this chart list. Again, just another piece of our research that we do. Anyhow, have a great day, everybody. Think about coming on board over at Earnings Beats. You can sign up, register for this live trading room. We'd love to have you. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.